Good morning and welcome to Forex In Four. Today is Tuesday, August 23rd, 2011. All right, this morning, much like yesterday, markets are starting out in risk-taking mode. Okay, we've got equity futures trading higher. We've got dollar trading lower, and we have basically a little bit of risk-taking going on. Now, this is how the day started out yesterday, but yesterday we gave back a lot of those gains, all right, and we actually had a bit of the flight to safety trade take place, and what that entailed was, the currency market hasn't been moving as sort of, I don't want to say crazily, but as having as big as swings as, say, the gold market or the equities market. So we've been fairly stable here in currencies, which is not bad. But yesterday, gold did get up as high as $1,900 an ounce. So let's take a quick peek at gold, and we'll see that. You can see that gold just made basically up 1910 was the high there, and it just got just below its pivot resistance, pivot resistance up there at R1 about 1913. The highs were 1912. You can see we've pulled back here to about 1878 right now. So what this is telling us, all right, I just want to go back and show you the euro here. Euro's higher today, is that markets are really being driven by dollar weakness, and that's no surprise coming ahead of this Friday's Jackson Hole meeting, where no one's really sure what the heck Bernanke's going to say, what he's going to do. Is QE3 coming? Is he going to set the stage for it? Is he going to lay out the options of what he can do? Is the political climate such that he'll be afraid to go with further monetary policy? So it's really a tough call right now. But a lot of people question the effectiveness of QE2. So is QE3 going to make sense? Well, hard to say. So in any event, we've got euro trading higher, and one of the things that's contributing to sort of this risk-taking mode going on here is that you have to consider where you're going to park your money, and even if things don't look so great. All right, U.S. stocks, the earnings still look pretty good. Okay, we also have the commodity currencies. All right, even if commodities prices do come down, and these currencies tend to be highly correlated with them, all right, a lot of these countries still pay pretty high interest. And Australia, the Aussie dollar, as long as they're not reducing interest rates yet, we could see people move there, and we can actually look at the Aussie dollar, and you can see that it's been up trading higher. We're up about in this 105 area on the 30-minute chart, perhaps putting in a little bit of a bull pennant here, which maybe is going to form ahead of this R1 resistance, which is now possibly support here on the daily pivot. All right, and I want to go back to euro. You can see euro is trading up, and we're looking at we're just shy of 145 there, and that 145 area. Okay, 145.20 has been a little bit of resistance. That's been the top of the range. You can see stochastics are a little bit oversold at this point. But we had some data that came out in Europe. All right, PMI index for Germany showed that it came in better than expected. So that was a good sign for manufacturing. That these numbers are still coming in a little bit better than expected. We also had China. They came in with PMI, and their number came in a little bit better than expected as well. So you can see that there's still economic activity going on. Now, the problem that's weighing on the market just a little bit is the German ZEW surveys, all right, which came in worse than expected. So the economic sentiment in Germany, they were expecting a reading of -26. They got -37.6. All right, the economic sentiment figures for the Eurozone came in even worse than that, -40. All right, and then the German ZEW survey of the current situation came in at 53.5 versus 85. And what these numbers tell us is that the sentiment there is very low, and people are not confident about what's going on. So these are similar to consumer confidence figures, but they're business figures as well. So it's just interesting to see that it doesn't necessarily mean that there's a problem today, but it could be down the road if people don't take the appropriate action. We know about what's going on in the Eurozone, and they're trying to work through the problems. There was a decent story this morning about Sarkozy and Merkel, and how they have these two contrasting personalities and the ways that they like to do things, and perhaps that's sort of slowing some of the problems or the solutions to the problems in the Eurozone. So that's kind of what we're looking at so far this morning. So we've got euro higher. You can see it's basically dollar weakness across the board. You can see here we've got pound pulling back a little bit here, but we hit recent highs up here, all right, of this 166 area. So you can see that we're coming in and we're just pulling back to 165, which may now act as support here for the pound. All right, a little bit later this morning, we're going to get Canadian retail sales figures. Just want to take a look at dollar CAD here real quick. And you can see dollar CAD has been just in this 99.50 range here to about I don't know, 90, call it 98 cents there. So we've been trading in a tight range here for dollar CAD, but better than expected retail sales figures could potentially move this down a little bit lower. You can see that we're trading under the daily pivot right now, which means Canadian dollar strength. Just want to take a quick peek at oil. Okay, oil's starting to pick up a little bit as well. Okay, you can see that we're just marginally higher here today, and one of the things that you have to consider is that oil really is a barometer here for global demand, and global demand is a reflection of what the global economy is doing, or at least what people think the global economy is going to be doing. So, with the PMI figures coming in not as bad as were expected, that's a decent thing for the global growth story. But we know about the problems in Europe with the debt crisis. Well, now we have to consider the growth story here in the U.S. and Friday is really going to give us a little bit more clarity on what Bernanke's going to do. All right, so you can see just in general, we have, let's see here, dollar weakness we mentioned, but you can see euros trading higher against the Swissy. All right, so we're coming back up, and we're gonna, looks like perhaps retest this area up around 1.15 with the resistance up at 1.1565. All right, and we can look lastly at dollar yen. Now, dollar yen is an important pair to keep an eye on. All right, because we know that yen reached an all-time high here versus dollar just last week. All right, and we're still sitting back up in the 76.50 range, but bear in mind, if this thing starts to strengthen, the talk of Japanese intervention always heats up, and people are going to be afraid to come out and get excessively long yen here if they're afraid that the Bank of Japan or the government's going to come in and start intervening in the currency. So that's really what we're looking at. So a little bit later this morning, we have the Canadian retail sales figures. There's going to be Eurozone confidence figures which come out a little bit later this morning. Those are expected to be negative, and then lastly, we have new home sales here in the U.S., which it's going to be interesting to see how these numbers come in. This is all these little measures add up to they're like little ingredients in the big pie, which is what we call the U.S. economy, which is a major part of the global economy. So everyone's sort of sitting back and waiting for the U.S. to sort of fix itself, and we know about the problems in Washington D.C. which are preventing that right now. So in any event, that's kind of what we're looking at today. It's going to be interesting to see if we can continue to move higher here in this risk-taking mode, or if U.S. markets are still a little bit fearful and we have a day like yesterday where we get that sell-off. So that's what I've got for today, folks. Good trading to all.